This video is brought to you by SmartInvestor for education purpose only. Salasar Techno Engineering's Q1 FY26 results show a moderate year-over-year revenue growth, but a sharp decline in profitability and margins compared to the previous quarter, indicating challenges with cost management and segment pressures. Financial highlights. Total income for Q1 FY26 was Rs 301. 81 crore, up 2.3% YoY from Rs 294. 90 crore, but down 18.3% QoQ from Rs 369. 54 crore net profit fell to Rs 8. 79 crore, a 48.2% QoQ decline from Rs 16. 97 crore and a 16.2% YoY decline from Rs 10. 49 crore expenses were Rs 290. 03 crore, up 3.3% YoY, but decreased 16.3% QoQ. EPS remained flat at Rs euro 10, indicating little value accruing per share over the prior periods. Segment and operational analysis. Steel structures contributed Rs 170. 35 crore in revenue, while EPC projects added Rs 138. 94 crore, suggesting balanced revenue drivers. EBIT margin for the quarter was around 8.4%, with net profit margin notably lower at about 2.82%, reflecting acute pressure on bottom-line metrics, despite stable top-line cost increases and lower operational leverage seem to have driven the decline in Q1 profits. Strategic and corporate developments. The company is under ED investigation, which brings additional uncertainty and could have implications for its governance and investor confidence. There were updates on preferential issue utilizations and statutory secretarial auditor appointments. No significant major project wins or capacity expansions were highlighted for the quarter. Outlook. The flat EPS and profit declines indicate challenges in extracting higher value from increased revenue, likely due to higher input costs or subdued execution margin. Sector fundamentals, including telecom and infrastructure orders, remain core drivers, but company-level execution efficiency needs to improve to restore prior margin performance. Salasar Techno Engineering remains a stable revenue generator in its core segments, but its Q1 FY26 results reflect margin, profit, and cost management challenges that will require strategic focus in coming quarters. Salasar Techno Engineering is aggressively expanding capacity and diversifying operations through strategic investments, new manufacturing projects, and international ventures, positioning for robust growth and improved prospects. By 2027 capacity additions, 2025 to 2027, the company operates 3 manufacturing units in Hapur, Uttar Pradesh, with a total installed capacity of 96,000 MT, and recent updates mention an enhancement exceeding 11,000 MT per annum for fabrication and galvanization. A state-of-the-art galvanization plant, reportedly Asia's largest, was commissioned, projected to add at least Rs 50 crore in revenue annually and to significantly boost export potential. The acquisition of EMC Limited brought in new capacity and assets, strengthening Salasar's ability to bid for high-voltage EPC power transmission and substation projects, particularly in 765 kV segment, with turnkey project execution capabilities in India and overseas, for example, a major ongoing project in Tanzania. Additional working capital and internal accruals are being earmarked for further expansions and automation initiatives up to 2027. Strategic initiatives and growth drivers. Key revenue drivers include the government's infrastructure push, 5G rollout, railway and rural electrification, and international expansion into Southeast Asia and Africa. The diversification into solar power, undersea cable networks, and modular construction is expected to open new business lines by 2027. Operational efficiencies, automation and process improvements are targeted to reduce costs by 10 to 12%, directly supporting future margin enhancement. Export orders remain healthy, with robust order visibility in Nepal, Africa and South Africa, and no plans for significant equity dilution. Future prospects for 2027. The outlook for 2027 is positive, supported by continued government spending on infrastructure, the National Infrastructure Pipeline, and a large diversified domestic and export order book. Share price targets for 2027 are optimistic, with projections ranging from Rs47 to Rs74, reflecting sustained growth, business diversification, and margin improvement potential amid sector tailwinds, though sector and macro risks persist. Financial performance is expected to benefit from lower debt levels, stable order inflows, and improved ESG compliance, attracting greater institutional participation. The company is positioned as a key beneficiary of India's infrastructure growth and the global movement towards sustainable and digital infrastructure. Salasar Techno's ongoing capacity expansion and diversification, underpinned by strong sector and policy momentum, signals strong future prospects and value creation potential going into 2027.